The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We start out the show with the DAX indices, of course, and as you can see, I posted the daily one first. It made a new high. Followed that by the smaller time frame, 15-minute, and you can see the swings that are going on in the market. Looks we're going to be higher again today. We are coming into the anniversary of the October 19th crash of 1987. This morning, I start my day by turning on Bloomberg to see that the world is still here and that there hasn't been any assassinations or devaluations or coups of any kind. And I happened to be listening to a gentleman, and he was talking about the crash of 1987 and what a non-event that it really was. And I could see the gentleman could not have been 40. If he was 40, I'd have been surprised. And the announcer, the reporter asked him, well, how old are you? And he said, well, he said, I'm 42. So he would have been, 7 years old? Was he 7? Yeah, he'd have been 12 years old when that thing went on, because that was 30 years ago. Anyway, folks, that was a very horrible day. I've been doing this for a very, very long time, and I have never been a day like that I've been that scared in my whole life. That was the hands down the scariest day, and I was short, and I did okay, but I was really afraid that we weren't going to get through it, because it was a disaster. Just to give you an example, today, if we were trading the S&P, trading at 2,500, the bid and offer between the bids and the offers, the bid would be probably at 2,500, and the offer might have been at 1,900. It was that big of a swing. You just more than $20,000 a contract on the swing is what it was. We were trading the big contracts that was trading around. I think we closed around 2,600. Around 260 on the 16th of October. That was a Friday. The Dow was down about 106 that day. That's when the options expired. I happened to be in those options and did extremely well. And had I had the November options instead of the October options, I would have done 10 times better. Needless to say, that doesn't mean anything, because that's all past. But believe me, people that try to talk to you about that wasn't anything. You look on the chart, sure, it wasn't anything. But when you're going through it, believe me, it was something. There were more bankruptcies on the Chicago Mercantile Exchange than any other time, with the exception of 1995, when Greenspan dropped interest rates in the middle of the market with about 2 hours to go, and the S&P jumped 50 handles without a trade. And there were more bankruptcies on, well, I think it was about equal, I guess. And anyway, those are the kind of things that you don't want to remember, but that's what happened. So it was a very, very bad day. The most interesting thing is I came into the day, I was long gold, and I was short stocks. I had 4 S&P short on, and I had 8 bonds long. And with the market down 300 points after about 2 hours of trading, I got very, very scared of the bonds. Even though it was supposed to be a flight to quality, they were still down about a half a point. I had about a half a point profit into them, and so I raised my stop, and I got stopped out with about a $300 profit. And then when the market bottomed the next day, bonds were at 15 handles, $15,000 basically straight up. And so anyway, those are some of the things that I remember. And also the gold took off. Gold rallied, I think, $40 or $50 an ounce over the next few days, because of the fact that there were so many seats for sale at the CME at that time. I don't want to go through anything like that again. I'd rather see the markets just trade normally. And they're trading normally right now. The difference is that I went over a whole bunch of stuff over the weekend, just looking at it. I'll just go through it. Those of you that get the letter, you'll see the charts and everything. I'll post a couple of them in here for you. But just looking at the indices, looking at the NASDAQ, we have a 3-drive pattern, a 5-wave reverse point wave. We have 2 large ABCD patterns, and we have a 1.618 expansion at 6106. So that's a very interesting. We have the Dow in the NASDAQ composite. We have 2 ABCD patterns, a butterfly, and 15-day high to low to high cycles that's in there that should have ended on Friday. On the Dow Jones Industrial Average, we have 3 ABCD patterns. On the S&P Cash, we have a 3-drive pattern and an ABCD pattern. On the IWM, the Russell 2000, we have a 5-point reverse wave, a 1.618 expansion, and we have the market top 2 weeks ago. It's trading at around 150, at 149, and it topped around 150 2 weeks ago. So that's an interesting one. The Dow Jones Transportations, we have 3 drives to a top, an ABCD pattern, and a big reversal day on Friday with a big wide-ranging close down. The New York Stock Exchange Index, we have 2 ABCD patterns and a 1.618 expansion. And not only that, but the New York Stock Exchange Index closed on the low of the day. Even though it was up, it closed on the exact low of the day, so everybody that bought that on Friday would have a loss. However, it's probably going to be higher today. And the banking index, we have 2 ABCD patterns, and also it's reversed quite a bit from that level. Now, whether this means anything or not, I'm not sure. The Bradley model is certainly off. It's more than 10 days now where it has not kicked in. And people ask me, what's wrong? I don't know what's wrong. I missed something. I don't know what it is, but, that's not a big deal. So anyway, just keep in mind that this is not different this time, folks. I'm 100%, 199, I'm an ivory soap, 199.9% sure that's what we're watching. So anyway, just keep an eye on that, and it'll be very interesting. I do believe that I'll post this chart here of the this is something from the Elliott Wave folks that I like to see some of the stuff that he does because it's very good historical, and we'll take a look at it here. This goes back comparing. I think I can do it. Hold on just a second. I got to move it over just a little bit. Hold on just a second, folks. I got to change something, otherwise I'm in a big trouble here. There we go. Now we can do it. There we go. Here's a comparing the from the 1840s into the 1920s and the 1930s into 2010. These are 68-year cycles. So you'll see they have some similarities, but basically it just shows you that these patterns that we have, they don't really change very much. The structure might change a little bit, but it pretty much looks the same. As we watch some of these things. Let's take I've had several questions about copper, and I will cover the copper here in just a minute, but I first wanted to go into the first break already, 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, excuse me, folks. What little frog in my throat? Hold on, Froggy. Okay, I posted a chart of the Dow E-mini showing you the ABCD structure going back over the past month. I've also posted the one for the Dow E-mini. That don't mean it can't go a lot higher. It just says that it's complete. So we'll see what really happens with this over the course of this next few trading days. But I don't, these anniversary dates, so we've looked at those very, very closely, and we don't see much correlation in anniversary dates, especially the major ones. I don't know why, but well, I know why. I think it's astrological, but that's just my opinion, of course. Let's take a quick look here at the copper market, folks, because it's really smoking today, and we want to get up because it's up 10 handles, which is that's $2,500 in copper. That's no small feat, and we want to take a look at that right now. You'll see that this is over the past year. From November through October, you can see we've completed these big ABCD patterns that are here. What's interesting here is you'll notice that during the August to September period, we had a 1-month sell-off, and the market stopped exactly at the 382. Folks, I didn't see that until over the weekend. I was trying to figure out why the strength was so much, and then I went back to that low that we had back in May of 2016, and excuse me, yeah, let's try it again. May of 2017, and that told us that that's where that 382 came in, and then we've had this huge move. Once we went above 305, that pretty much told you that it wanted to go a little higher. Once you exceeded that 61% retracement from the 317 down to the 287 level, actually that was at 289, that told you that most probably was going to go higher, especially with that really wide-ranging bar when you had a 10-cent handle that day also. So we're at a real interesting breakout level that everybody's talking about. So what I usually do is look at it on a little bit different time scale. So I go into a weekly, which I don't do very often. But if we look at the weekly chart of copper, you'll be able to see here that we are making a ABCD structure from the October 16th, October of 2016 low. It fits just spot on to this 323 level, which is near 50% retracement of the high from 2011 when copper was $1.50 higher at 460. So this is basically a Gartley sell signal, but with that wide range that we have here, you'd certainly have to wait. It's just that buying a breakout here, I don't think would be the smartest thing in the world to do, but when it comes to buying breakouts, I finished 10th in the class out of 11. So I don't know who the 11th person was, but I don't buy breakouts very often, and that like maybe never. Okay, now let's talk a little bit about the gold because we're very, very friendly to the gold market. We're up into some serious spots here where we got to pay very close attention to it here today because we really haven't had any pullback. We've had only one pullback of $11, and that didn't last very long at all. That wasn't even a 382 retracement. So we've had no retracement here in gold at all. My game plan is what I'm trying to look for is to try to buy a 33% retracement of this move, and we've gone $44 up, so around a $15 to $17, the harmonic number in gold. I would really be interested in buying that if we got a $15 to $17 correction. The only correction that we've had so far is between the 10th and 11th of October. After we bottomed on the 6th, we had one day we were down 11, and then on the 12th and 13th we were down 7. So we really haven't had very much. So my assumption is we'll probably make 1.618 to the 15, and that'll get us down probably around $21. That would be my guess. So the 382 of this move going $42, 40% would be $17. That would be just about right. So watch for a $17 correction in the gold market because it follows the ABCD structure pretty nicely, and that's what it looks like from my vantage point that I'm watching here this morning. Another question that one of our listeners asked, and that's about Netflix. We have earnings for Netflix coming out. I don't do any stocks, but I happen to follow this one, mainly because someone is in this stock from a very, very low level, and they're getting out of it just about now. But let's just take a look at Netflix. We got earnings coming out. You can see here it's got two major gaps, one back in October of 2016. You'll see it gap there. It came back, tried to fill the gap. All it did was go down and touch the high of April. That's another reason why you need to watch these old highs and old lows because they give you a pretty good idea sometimes where support comes in. If you want to see that happen twice on this chart, all you have to do is look at the period between April and October 2016 and see how the market came down and touched it. All right, let's move forward into time. Look at the time period between May and August. What did it do? It broke out, had a huge gap there in early July, rallied way up in the air, and then it came down and touched those old highs. And that was a perfect 61% retracement off the July low. And look where we are now. We're up in this area around $200 that it should have some really strong resistance between 200 and 210. Now it's got earnings today, and of course, I think the whole world belongs to Netflix. I have a subscription. I think I've used it 3 times in 3 years, but as Tom O'Brien said, $10. Everybody spends $10. So we'll see. Anyway, that's what Netflix looked like. As far as someone's asked a question again about this Apple, that we happen to be in this Apple trade that I think is still looking pretty good. Let me just put this up here. You'll see this is the long-term chart in Apple going back over the last 8 years. You'll see that we have two perfect 1.618 expansions. It stopped right at the money, 165. We were fortunate to get the short off right about that price, and we put our stop in at around 159, I believe, and that way you protect a $6 profit if we're wrong. But if this is right, it's going to correct like it did the last time, which it was $70. So, $50. So that'll be an interesting one to 88. No, it was $70. I'm sorry. Anyway, that's what we're watching here in the Apple. Okay. Someone asked a question about the volatility index. Folks, that volatility index is got a, they're bearing it all. The services are for it today. They're going to be bearing the VIX index forever. It will never be used in technical analysis again. And if you believe that, I still have 2 shares of the Brooklyn Bridge for you. When we come back from our break, we're going to talk about everyone's favorite stock. This is tongue-in-cheek, of course, which is Bitcoin. They all talk about the bubble in Bitcoin. Well, when we come back from this little break, we're going to take a look at Bitcoin, and you'll be able to see it for yourself, whether it's technically accurate or not.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look here at Bitcoin. Request, of course. I don't trade this stock. I do want you to take a look at it, but if you look at that point A, you'll see that happened back in July. If you'll notice that was a 382 retracement of the low that we had way back in March. Notice how the market went up and made a big ABCD pattern at B. It came down to C. The 61% retracement was just a tad higher than that. it got down to 0.64, and believe me, for trading purposes, 0.64 and 0.61 or 0.618, they're pretty much spot on. And now you see that we're looking for an ABCD pattern going up to the 1.618 level at around the 62.12 level. So that's only 5 handles away. So we easily see 6,000 in Bitcoin and possibly even a great deal higher. But that's what it's looking at. What's important about this, folks, is that there's enough people in Bitcoin that are making these charts look normal. That means that they are normal, because there's enough people trading it that makes a normal market, because it's based on natural law, and that's what we're watching. So we'll keep an eye on this just for learning purposes, but 6,200 looks like a pretty good spot where it's going to be off to the races, or at least you get to that level. I don't see anything holding it back. I mean, there's I really don't. I'll be really shocked if it doesn't hit the $6,200 level. That's the way it looks like from my perspective. Anyway, if we what other question someone had? Where is it? Oh, I know what it is. It's the Canadian dollar. We've been following this Canadian dollar for quite some time, and this was an interesting one, because what happened was on Bloomberg early this morning. Yes, I will cover wheat in just a second, Princess. Hold on. You'll notice this is the Canadian dollar, and if you'll notice this chart with the higher lows, the gentleman on Bloomberg described these higher lows. He didn't put the ratios in, but he described looking at the Canadian dollar's higher lows very similar to what we're looking at right now. Now, what we need to do is to update this, because the Canadian dollar had a really nice rally this morning that got us up to the 61% level, which I think will be relatively important. The $64 question is, will I be able? Here, I did. I will be able to find it. Here you are. We'll take a look at it, and it's formed a little bit of a head and shoulders pattern here, and we'll see what's going on. The wheat market, you can see here the Canadian dollar. You've got a potential head and shoulders pattern right here. The left shoulder is equal to the right shoulder, right around this 125.40 level. If we get above 125.70, this is wrong. We'll probably go up and make a 3-drive pattern up around the 126.40 level. That's the way it looks like in the Canadian dollar. And we'll see if that's going to be anything at all. The wheat, let's just get this up here. We'll take a quick look at it. We're looking at Christmas wheat here, so let's get Christmas wheat up. And of course, it's going to be the last one on the totem pole here. We'll get it up here so you can look at it. We had that really nice 3-drive pattern down there at the 429 level. The market went to 428.5 and quickly rallied to 441. The first profit objective in the wheat is in. So you definitely, if you have multiple positions, 2 or more, you want to book half of it and then put your stop at the 430 level. And that way you protect the position for profit no matter what. But you do make your first profit objective in the wheat. There's not a problem, folks, but here's the way I see it, and I don't know if it means a whole lot or not, but we'll take a look at it. Let's just get this up here on a 4-hour chart. You can see the November soybeans, which is the big daddy rabbit of the trading world over there at the Merck. Excuse me. It's not the Merck anymore. It is the Merck, but used to be the Board of Trade. You'll notice that we're in this really tight triangle or trading channel here, and it's a perfect trading channel because it's 1.27s on the upsides and it's 707 or 786 on the downside. And it started way back on August 15th, and it's still in place. So my assumption is we're going to pull back a little bit here, maybe for 3 or 4 days, and maybe get down to maybe 980 or so in November beans, and then I'd look at them again. But if we break out above that channel to the upside, above 1005 in November beans, then I would say, this thing has got legs and it's probably going to go a lot higher. But we're seeing the same thing in the soybean oil and in the soybean meal. That's all telling you that it's up against some really hard area of resistance in these markets. So you have to be able to pay attention to that. And these are all covered in the 24/7 futures part of the newsletter, and we're that's what we're watching anyway. But the wheat work. That's basically the bottom line. How much higher it's going to go, I really don't know. But that's one of the things that we want to focus on, is that you want to protect your profits as best you can, because believe me, you're going to be wrong a lot, but you'll be right a lot. And what you want to be able to do is to be able to put your trading hat on and get into something else if you lose on something, because it's just a matter of doing one thing or another. We've had a request to take a look at the coffee market, which I don't trade, but I do follow it for someone, and we'll pull it up here. You'll notice here that this is the coffee. You'll notice that we just completed a big ABCD pattern down here at the 61% level. Folks, look how many times coffee has tested that 61 level at 126. We went below it for 2 days, down to 124.50, and then quickly rallied 8 cents and then came back to close right at it again. This is telling you that we're at some pretty strong support here in coffee at 126. We're seeing a lot of these commodities at potential bottoming areas. Beans, meal, corn, wheat, oil, soybean oil, all of these do have potential for some serious bottoms coming in here, and especially the agriculturals, because we're into the harvest period when usually harvest selling, keeps the prices down. So kind of watch this, because you want to be looking at this for the beginning of the year, as we'll have some other patterns that form that will look pretty interesting. So that's the bottom line in looking at some of these commodities, because they're pretty good. They're excellent trading vehicles, just like most other things. Okay, I wanted to do something else here. I wanted to talk just a little bit about these high yield bonds. This was a special that they had on Bloomberg over the weekend. The fact that this was the greatest investment ever invented, high yield bonds. You'll see that on the high grade, I get it all messed up. High grade means very good. High yield means junk. High yield bonds, they used to be called junk bonds, and Milken changed the name from junk bonds to high yield bonds because they were easy to market when he called them high yielding bonds. You'll notice that the high yielding bonds, junk, has been outperforming the AAA U.S. Treasury bonds by quite a big margin, and that means that something's awry in these markets. But that's neither here nor there. I am still of the we made a top in these Treasury bonds in July of 2015, so it's going higher. Rates are going higher.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, we're back, and we want to talk a little bit about silver here because it's at a really getting very, very close to a real critical level, just like we are in the gold market. I'll post this up here so that you'll be able to see it without too much trouble. You'll notice that about another penny or two higher in silver around this 1755 area, we're going to be hitting a 61% retracement from the high that we made back on September the 7th, and we'll be making a 1.27 expansion from the high to low that we made on September 26th to October 6th. So 1755 is going to be a really interesting spot. If we blast through there, folks, it's going to go higher. But right now, it's really set up for a correction in silver and gold. That's what I'm looking at today. I'm looking at a potential high in the gold, maybe at 1309, 1310 at the most, and then a sell-off of somewhere around $17. We're trading around 1307 right now. So it's pretty good. We're starting to pick up some big moves here in the NASDAQ is moving, but the other markets are not moving too much. The wheat is trading at 441. If you're long that wheat, you definitely want to take some of your profits in here. And if you'd like, you could put the rest of your position, put it stops at 430. If you're going to do that, that would be the thing that I would be watching very, very closely as you're looking at some of these things. Now, we need to chat by the way, we're going to have, hopefully we'll have Stan Harley on this week, and also we're going to have Bill Meridian from Cycles Research out of Vienna, Austria on, and we'll be looking at some of these other markets with them. And then also we have on the new moon day, which I believe is the 18th. Let's double check this on the old calendar. Yep, it's on the 19th of October, the anniversary of the big crash. We're going to have a new moon, and we're also going to have we're going to have normal either on the 18th or the 19th. I'm not sure, but I will have that scheduled for you too. One other thing, John, there's going to be a seminar tonight with John Jameson out of the UK. He's a good friend. We were going to do this together, but after I listened to what he had to say, I asked him if I could just be the host because he's got some of the best information that I have seen on the euro versus the U.S. dollar and also the E-mini S&P 500. If you trade either one of those, I would consider this a must. In fact, even if you trade anything, I would consider it a must because the way he approaches the market statistically is like something I've never seen before, and I've seen a lot. So this is really good stuff. I would really recommend you listen to it. I mean, it costs, virtually nothing. If you don't like it, you can rattle the cage and get your money back. So it's a no-brainer, folks. And he's very entertaining. He's really smart. He's not... He's been long Bitcoin since 2014, 3 years now. So he must be doing something right. Anyway, he's going to give us some stuff on how to look at these markets and break them down statistically to put the odds in your favor, and that's what it's all about. It's all about probability and trade selection. So, and it's really good for risk control. So I think you'll enjoy it. If you want to go to it, you go to www.tfnn and sign up, and I think you'll like it. It'll be probably an hour and a half, somewhere between an hour and a half, but it's quite good. And you'll get a copy of the slides if you do sign up. So it's something that you really want to pay close attention to. Okay, let's see where we are now. We've made new highs now in the NASDAQ and just about everything by just a little bit, and we'll see what's going on here. The NASDAQ is really a tough one to put a handle on, folks, because you're only talking about 10 stocks, and those are the big daddy rabbits in the bin, and so you when you're trading that, you're basically trading the Apples and the Googles and Facebook and all that other stuff, whereas the New York Stock Exchange Index is certainly a whole lot easier. By the way, for your information, the Apple just made a 61% retracement just now as we speak at the 159 level. So keep an eye on that. That's a very interesting spot here. We'll pull this up so you can take a look at it here in Apple. This is going to be a real interesting one. They're all interesting, aren't they? But anyway, you'll see that's where we are here with the Apple, and then we'll move on to the next ones as we go through. The Treasury bonds, folks, the Treasury bonds want to go lower. That means higher interest rates. We just had a really nice bounce off the Treasury bonds at the 141 level. They're coming right up into some really strong resistance. We hit this right spot on. If you'll take a look at it, you'll notice that we were right at a 20-minute line at this 154 and change level. It was also a 78% retracement of the low or the high that we made back on September the 25th. And it was almost a perfect 50% retracement of the high that we made back on September the 8th. So bonds and notes both look like they want to go lower, and that means higher interest rates. So that's what that looks like. That was a rally in a bear market, in my opinion. Stopped pretty much where it was supposed to go, and then we'll see, what happens from that level. So that's the key thing that we're looking on right now. So that's what we're watching, which I think will be it'll be fun to follow through the rest of the week for sure. What are the other markets that we're watching here? Okay, we're trading about 61.16 in the NASDAQ. The 1.618 expansion on that on the long-term daily was 61.06, so we're 10 points higher than that, which is not surprising because that thing's the pork bellies of the stock indices. So keep an eye on that as we're looking. I don't know why why my stocks keep changing. Is because the main thing is it's because I keep it live. If I push it on live, it changes. So I'm sorry if I make it a static chart. In other words, I prepare these charts before I come on the air. It takes me about an hour to get ready, so I prepare those so that they're static. But when something happens in the middle, I can like with the Apple, I can quickly go to that and see, what's happening with that. So that's really what I'm looking at when I'm watching this. So I hope that's not too much of a problem with this. Gator's asking a question of covering oil. I haven't been oil in for a couple of days now, so I'm looking for oil. Look for a sale in oil, but I think it's got a chance, for possibly, we got up to this 52.40 level, which was right at a 70% level. So that was the area where you want to be looking to be short the oil. But right now we're 40 pips below that, so I really couldn't do much. The only thing that I'm watching really closely today, because we've been in the euro, it's been acting very, very nicely. And I'll bring this chart up so you can take a look at it. And hopefully you'll be able to see this one. This one should fit the thing here pretty nicely. You'll see that I'm looking for oil to. It's right trade. The crude oil is trading at around the 118 level right now. We shorted that up around 118.60, and you'll notice the similarities in the move between the 4th and the 6th and the 12th and the 16th. We're looking at 117.50. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've posted the chart of the VIX index up here, the one that they're having services for there at Arlington Cemetery. Anyway, well, I shouldn't say Arlington. That's a very holy place. Anyway, I was trying to be facetious. But anyway, it's made a 78% retracement of the last move. We haven't made new lows in the VIX index that I follow. Some of the others, of course, the futures, of course, have done that. But this index that I use as a broad guideline certainly has not done that. But I still believe when I look at all these patterns all completing, it's very similar to what we were looking at in 2009 when everything was on the bottom and nobody wanted it. And now with the fear and greed index has been above 90 now for several weeks. It's just a matter of time. I don't know. The timing has not been good with the Bradley model. This week is that we do have this new moon coming in here on the 19th. Plus, we have some other really strong cycles that Norm Winsky will go over with us when he's on the air this week. So that'll be another one. That'll be somewhere this week, Tuesday, Wednesday, Thursday, Friday, whatever day it could be, but it keeps grinding higher. When it makes its top, folks, it will let you know, believe me. And what happened was people will buy the dips because and that might be the right thing to do. You don't know, but that it will tell you when it's finally made the top. This grinding death by 1,000 cuts, if you're short, is no good. That's why you try a short, you get out, and you wait till the next signal. You might have to try it 4 or 5 times or 6 times before you get it right. But when you get it right, it's going to pay you many times more than those few losses that you took on the way up. One of my favorite quotes from Tudor Jones is when he was interviewed by the Wall Street Journal. They said, "Wow, you must be proud of yourself picking the bottom in the bond market." He said, "Well, the quote should be, Tudor Jones picked the bottom in the bond market after being wrong the previous 6 times. Well, this is the 6th time. So we'll see if it's going to work this time. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.